So great, wonderful to be here. Congratulations, everyone, Sanjeev, Hari, and all your friends and well-wishers who joined us today to congratulate you two gentlemen in particular. Thank you, Raghu, for joining us. And on behalf of Sanjeev and Hari, I thank you for taking your time out to be our guest of honor today.
Thank you.
And as Hari and Sanjeev tell me, actually, we don't just have the three people who are visible on the camera, the guest of honors. Every single person who has joined us today as an audience, as a participant, is a special invitee. And I welcome you all to please make this session a very, very interactive one. Laveen in particular has told me that Sanjeev and Hari have both kept their entire evening free. They're here till post dinner as well. So we can keep talking even after the slated end. Very warm welcome once again. Good evening, ladies and gentlemen. My name is Deepshikha Kumar and I am the founder at Speakin. We are Asia's largest platform for the tallest business leaders from the region. Continuing the tradition of select conversations of excellence, this evening we discuss in detail what it takes to build a company. The journey of an enterprise from a startup to a full-blown IPO-ready business. Scaling a company entails a long-term vision that includes putting in place a timeline to achieve planned milestones, hiring and managing the right talent, sourcing capital to support expansion, and building yet a very, very effective process with technology. It requires that a founder understands how to put together an amazing puzzle of men, money, machine, and material. To aid this understanding, we are gathered here to celebrate the launch of a book that is all set to become a Bible to entrepreneurs, leaders, and investors involved in scaling startups from a pony to a unicorn. And that, friends, is the name of the new book written by the authors, lifecycle investor and co-founder of Daksh and Helion Ventures, Sanjeev Aggarwal, and angel investor and management guru, Hari TN. I'll take a moment to share a bit more about the authors. Sanjeev has spent 3 decades in the Indian technology sector, an entrepreneur and a venture capitalist. Sanjeev was the founder and CEO of Daksh. He was chosen Ernst & Young Entrepreneur of the Year and went on to co-found 2 venture capital firms, Helion Ventures and Fundamentum. Where Helion Ventures today has over $600 million under management, he was awarded the Venture Capital Professional of the Year for Asia region and has been an active participant in building of not one, not two, but 3 unicorns. Sanjeev today is joined by a very dear friend, Hari TN. Hari wears different hats: an author, an angel investor, advisor to VCs, mentor at startup accelerators, sounding board to founders and startups, columnist, and more. Hari has now co-authored 6 books with 3 more in the pipeline. He's been a part of the management team at multiple startups and helped shape 4 successful exits across sectors, including an IPO on NASDAQ. Extremely passionate about building organizations for scale through clear, uncluttered thinking and relentless education, his books are back-to-back bestsellers. And this one, ladies and gentlemen, is no different. Based on the strong demand, I'm told that Penguin has decided to go for a second print run even before the book has been published. From Pony to Unicorn beautifully describes the 10 to 10x journey that every startup aspiring to become a unicorn has to go through. Once again, thank you very much for joining us for this launch. Congratulations, Sanjeev and Hari, on this milestone in your very, very illustrious careers. Very, very long introductions. I must say that when you talk about thought leaders, it takes very, very long to talk just a bit of what they are, what their journeys has been. Before I bring you 2 gentlemen into discussion, Sanjeev and Hari, let's start with a perfect ode to this narration and welcome an entrepreneur who has lived this journey of scale. May I now welcome Raghunandan, the founder and chief executive officer of Taxi for Sure. Raghu, as he is popularly known, founded Taxi for Sure in 2011 with a vision of solving India's commuting woes. While Raghu is a hands-on CEO, he focuses his energy towards building strategy, product, and more at Taxi for Sure. A graduate of Indian Institute of Management, he has gained experiences at Feedback Ventures and Texas Instruments before journeying on to the entrepreneurial wagon. Raghu, you're yourself an avid reader, and as I'm told, you are a walking encyclopedia in your own rights.
I have an opinion on most of the things. Let me put it that way.
We would love to hear more of that and the opinion as you open the conversation today with your thoughts on the book, experience of having interacted with the two authors, and your own journey. Raghu, welcome aboard.
Hey, thanks a lot. Thank you, Deepshika. Okay, great. So when I heard that Sanjeev and Hari are co-authoring a book, the expectations were significantly high because I've read a lot of books by entrepreneurs who build large systems and stuff like that, and those books only talk about their own personal journey, right? And it's restrict itself to a single company. There are very few books which cuts across multiple companies, and given that Sanjeev comes with this background of building Daksh and being an investor and seeing startups from a very early stage to become unicorns, right? He has phenomenal experience. And Hari is a completely different guy. He's an angel investor, mentored to a lot of startups, been part of multiple startups. He has seen things getting built. Right. So when these two amazing folks come together and they're going to talk about how to really scale a startup, everyone has to be get curious, right? So the expectations were extremely high. All right. And when I started reading the book, right, I didn't. So I went through a flow of emotions, right? It's not that okay. So one was the expectations were high, and as I went on reading, it's like okay, this is good, this is interesting, and over a period of time, I came to the place that okay, oh, I wasn't aware of this. Then over a period of time, I realized that there is this strong feel of jealousy that comes. I don't know whether people can relate to it or not because I wanted this book when I was building my startup, and it came few years later. So it was like, boss, this is so unfair, right? But as and when I moved, right, so the way they bring about things and stuff like that, I realized that I think this is an amazing book for most of the entrepreneurs and most of the senior leadership and things like that. Primarily because I do a lot of angel investment these days, right? And most of the challenges that these entrepreneurs face, I try to talk to them through right. I talk to them about all those things and stuff like that, give them multiple perspectives, right? Sometimes it's gives me a deja vu feeling because I'm talking about the same thing to multiple people, right? Similar things to multiple people and stuff like that, right? And I think that's where this book is going to come significantly handy, right? Instead of restricting those conversations to one-on-one conversations between an entrepreneur and a mentor and stuff like that, right? And this goes way beyond, right? And I think this is the, I mean, as some of the people who wrote reviews about this book, right? I think this is a must-have book for the entrepreneurs who are looking at scaling their businesses, and also for senior leadership team as well to really do that. And if I had access to this book during my TFS days, I think I would have probably gone ahead and done a lot of things, whole lot differently. Right. So the thing that I liked about this book is, I think first and foremost is it is not at all preachy, right? And because whenever somebody is trying to preach, right, people lose interest, and founders especially. I mean, people just don't want to take gyan from anybody, right? So this is not preach at all. I think the first line in the book, right, that sums it all. Every happy family are alike, and every unhappy family is unique in its own way. All successful startups look the same. Every startup that doesn't really scale, right, they would have failed for multiple reasons. I think that the first line only summarizes the whole book. So that's an amazing thing. All right. And when any entrepreneur is building a startup, right, we face through multiple dilemmas, right? One is we have to make decision based on very little access to data, right? And there's always dilemmas, whether it's growth versus profitability, whether it is over capitalization versus under capitalization, whether it be the senior leadership team or a mid-level team, right? Whether to take money, not to take money, whether to expand, not to expand, and stuff like that. There are multiple dilemmas. The challenge for an entrepreneur would be what is the kind of impact that would have if we take a particular path, right? And almost all the books that talk about startups which are scale only talks about the paths that those guys have taken, not necessarily the whatever the alternatives that were available and what would have happened if those people would have taken those alternatives. I think this book fills that gap, right? It provides the different options, different dilemmas, different trade-offs that the entrepreneurs effectively want to have, right? And how one has to think through this. What are the impact? What are the consequences of things if you pursue multiple paths, right? So it's more like a Bible, and it's not that you have to start from chapter one and into the go to the thing. So you can pick and choose the chapters that you want to read, right, and gain the learnings from that, and start implementing those and inculcating those learning in the kind of decision that one makes. I think that's the beauty of this book. So what I would say is every entrepreneur should really have access to the book. So I mean, we got a whole lot of things right, in terms of while scaling, right, the speed, importance of speed in decision making, right, decentralizing decision making, access to data, right, and making decisions based on data and things like that. There are a whole lot of things that we got it wrong, right? How to go about building a team, right? Should we focus on profitability or should we focus on growth, right? But if we had some of these, I think it would have been a very good thing, right? So, and given the stage at which the startup ecosystem in India is, right? Uh, I think this book, the timing of this book wouldn't have been much better, right? So when we started our companies, getting access to good people itself was a huge challenge. So nowadays you get a whole lot of people not just been wanting to be part of startups, but people, amazing people are starting companies, right? When you put some extremely smart people to solve some basic problems, obviously the results will be phenomenally good. And if you can probably empower them with this kind of mentorship, this kind of knowledge, this kind of experience and stuff like that, right? The probability of them failing reduces significantly. And because of which, I think all of us would be benefited, right? Over the years, I've seen, right, from consumer tech to SaaS companies. Now, the kind of startups that I see are in space tech, in agriculture, right? So India has always been an agricultural economy. Very recently, it's moved to a services economy, right? And most of the brilliant minds in the country never looked at agriculture. These days, some of the smart brains are looking at agriculture, right? If you put some of the smart brains in some of one of the largest industry in India, right, something special is going to happen. The impact will be phenomenally higher, right? And that's the way I would really look at it. So because of which, we'll probably see more and more entrepreneurs starting multiple companies. Books such as these is going to help and empower these entrepreneurs to really start building the companies and scaling those companies, and not just scale and leave it at that, but to sustain the scale as well. It's probably easy for us to hit scale once, right? But sustaining is the more the harder part, right? And of course, right, hitting scale is easy, sustaining is much harder, right? If the people, if the systems, and if the teams and processes are not in place, it's very difficult to sustain this. And the books brings out all these nuances extremely succinctly with tons and tons of examples, so that people, every different startup can relate to this. And that's the benefit of having Sanjeev, someone like Sanjeev and someone like Hari, right, penning something like this. So I would recommend all this book to everybody, and I've been waiting for this book for a very long time now, right? Close to around 6 to 7 months now for this book to be launched, so that I can help my fellow portfolio entrepreneurs the essence and the experience and the rich experience that these two have, so that they can also learn from all this. So my sense is it's a must read for each and everyone, not just within India but also abroad.
Fantastic, Raghu. Thank you so much for sharing those insights. Of course, coming from someone who's lived that journey. You have yourself, Raghu, been awarded the 40 under 40 business, one of the 40 under 40 business leaders of India, and have managed to grow an idea into a profitable business. Let me just come in and ask a very quick question. What, in your way, has been the trade-off between scale and profitability, and which one would you recommend as a wiser path to growth? I know you talked
uh,
about sustained scaling.
yeah, see, I think very late in my journey, I realized that even though the question seems to be either or, right, the answer usually is both. All right, and it's a sheer the timing of where you are in the industry that you're operating in, and where the market is heading towards to. right? And when we were building a startup, we focused so much into the business, we didn't really keep an eye on what were the things that were happening in the overall market, right? And during our journey, so when we focused on profitability, the market demanded growth, right? And so probably that's where we missed out on. But the thing is, that's where, right? So you can't really do something that is different from what the market is asking for. If the market is demanding growth and scale, that's what one has to really focus on. If the market is demanding profitability and stuff like that, right? That's what one has to focus on. And that's a type of working that every entrepreneur has to really do, right? And so we were aware of that. We thought that building a business is we need to look at the internal systems and processes a lot more, right? And the industry that we are operating a lot more than what is happening in the overall market. And that's a huge learning. It came at a huge cost though, but it's a huge learning.
Great. My last question before Hari and Sanjeev, I invite you in case you want to have Raghu input on any leading areas. Raghu, 3 lessons from you on scaling from pony to unicorn. Add on to what the treasure that Sanjeev and Raghu have built in. 3 learnings.
The team, okay, right? You are as strong as your team, right? Second one is empowering the team. No point in having a great team, but not to empower them. Third thing is look at the market.
Excellent. So team, empower the team and look at the market. Keep an eye on the macroeconomic circumstances. I'm sure we have a lot of market developments this year in 2020. So let me now bring in the 2 authors. Thank you very much, Raghu, for your time. And
thanks a lot, Deepshika.
It's been a pleasure talking to you. So may I please now invite Sanjeevji, just the starting question for you. You yourself been involved in various scale-ups since the year 2000. How has your journey been? Take us through your journey to this book.
Deepshika, I got involved with the entrepreneurial ecosystem in year 2000, at the time when Daksh was born. And when we wrote the business plan, Pawan and I and Arvind and Venkat, we had said that if in 10 years we can be 1,000 people company, we will feel that we have arrived. And we were so fortunate to have gotten a trend, which was around 2 factors. Offshoring was pretty well established, and there was an internet boom. So at the intersection, we were trying to solve for outsourced customer service. And I think when we added a great team to that excellent market opportunity, as Raghu highlighted, the growth happened pretty much on autopilot. So, and in my prior life, I had only experienced working with 15, 20, 30 people. So I think all of a sudden we were running this mammoth company that had grown to 20,000 people in 6 years. So I think this journey was very enriching and liberating, and which is partly because of the ecosystem that we are a part of. You know, India's intellectual capital plus the market opportunity in United States. When we put these two together, wonderful things happened. So that was my entrepreneurial stint. And then I said, I have learned some about how to build a rapid growth company. How can I take these learnings and apply it on a broader canvas? So then my stints at Helion and Fundamental, where I had a ringside view to company building, and been very fortunate to see many unicorns emerge, which include Big Basket, Make My Trip, and Azure Power. Only the other day, one of our portfolio company, Pubmatic, listed on NASDAQ. and is now another unicorn in our portfolio. So I think the way quality of entrepreneurs have ramped up and the way age has plummeted. I started when I was 40, and today that's the age at which people like Raghu retire because they have hit all the milestones that there are to be hit. So I think being on both the sides, being an entrepreneur, being an investor, being a board member, it's been a very rejuvenating experience for me. And 20 years back, I couldn't imagine that this is going to be so much fun. But I feel that given the ecosystem we are a part of, India's entrepreneurial ecosystem, the best is yet to come. So all of us who are associated with this ecosystem are, I think, very, very fortunate that we are getting this exposure, because there are very few economies which are growing 7, 8, 10%, digital economy which is growing 100, 200%. So when you have so much momentum, a lot of your mistakes get corrected, and momentum kind of comes like a tsunami and sweeps you. So that would be my journey of these two very different experiences.
Excellent. Extremely, extremely inspirational, Sanjeev. Now, may I come to Hari? Hari, you've been an author to 6 different books. What has been your motivation behind writing From Pony to Unicorn, and what audience is this book targeted towards?
So clearly, Deepshika, I think my motivation stems from a deep desire to share some of my learnings along with Sanjeev's learnings, for the last 20 years, the journeys that we have been through, the mistakes that we made, the successes we've had. I thought it'd be very helpful if you could share these journeys with the next generation of entrepreneurs who are trying to build sustainable businesses. And I also deeply believe that, there is nothing particularly, rocket science about scaling startups or scaling companies. And everything that we've written in our book, all lessons and insights, are actually easy to understand once they are discovered. The point is to discover them without paying a high price. And we thought, why should entrepreneurs pay a high price to learn some of these lessons? Though the reality will be that 85% of learnings in life come from your own personal experiences and you making those mistakes. 15% at least can come from reading what others have done, reading the mistakes of others. And we thought it'll be helpful to share this. And both of us feel very passionate about the startup ecosystem in India and believe that it holds a lot of potential and promise. And the kind of entrepreneurs that are now springing, 20-year-olds right in their college, they are, doing their first startup. We thought, we should support this ecosystem and share everything that we've learned and give back to the system in some way. So that clearly was the only motivation for writing this book. And we thought it'll appeal to all entrepreneurs because every single entrepreneur has a desire to scale their startup. We thought it would appeal to investors as well. And even leadership teams and employees in startups would find this pretty useful. So that was broadly the motivation, Deepshika.
Absolutely wonderful, Hari. As Raghu was also talking about that, it's not just the founders, but also the larger team, which needs to be empowered, one, and of course, be oriented with learnings that you have shared. So, and a leading question to that, Hari, is that, in your opinion, you've seen so many organizations scale and change from one stage to the other. What are the key characteristics of companies that have scaled successfully that make them different from the competition? And what are the key determinants of scale, in your opinion?
Yeah. So, we can look at it in two ways. One way of looking at it is that as a young startup, starting from an idea, goes on to become a large and mature company, goes through a phase change, multiple phase changes, in fact, goes through different hairpin bends. And I think while you are inside a startup, it's very difficult to recognize these phase changes. And as I worked for startups in the last 18 years, somewhere intuitively, I began to get a sense of what are the different phase changes that a startup goes through as it scales and becomes a mature company. And, one fine morning, I also just happened to read an article in Harvard Business Review written sometime in 1972 by a guy called Larry Grainer. And it was such a beautiful article. It had structured the response so nicely, which is it had identified the different phases of a startup's growth and identified, the different phases, what the kind of problems that they go through, which made me realize that every problem in this world, that matters has already been addressed, has answers have been found by somebody. All you need to do is rediscover those answers. And I serendipitously happened to bump across that answer. And that's the reason why I keep saying the probability of discovering answers is much easier if you read a little bit. And nothing is rocket science, as I mentioned right at the beginning. Every lesson can be learned, provided you discover it. And how do you discover it? You can increase the probability of discovery by reading something. And the other way of slicing this is that we have identified 9 determinants of scale, which is that successful companies which go on to become unicorns. And unicorn is not necessarily a billion-dollar company. By unicorn, I really mean a metaphorical large company. So a startup to a large company, I think we feel there are 9 determinants of scale. And we talked of these 9 determinants. We identified them in some form of an acronym, which is the 2 M's, the 2 S's, the 2 C's, the 2 S's, and the human capital side. So I think we will talk about these 9 determinants of scale as we go along, but these were very, very critical. And we've spent quite a bit of, content in the book explaining each of these 9 determinants with a lot of real examples.
Absolutely, and they together lay out the foundation of what it takes to scale an organization, as you talked about, building this thing. Sanjeev ji, now let me ask you a question before I can also see that there are already questions which have started coming. We will take some of them because I think they're very relevant right now to the topic that is being talked about. Just before I do that, Sanjeev ji, what do you think, how do Indian startups compete? You talked about being listed, one of your organizations being listed on NASDAQ sometime back. How do you think Indian startups compete with established multinational organizations? And what are the biggest challenges that entrepreneurs should be especially mindful of, the Indian entrepreneurs, when competing globally?
I think that's a very good question, Deepshikha. And there are a few dimensions to this question. One is that, do you have an early mover advantage? For example, Make My Trip was the first to market in the Indian online travel industry. And Expedia and several others were laggards in their entry timing. So one set of companies succeed because they outran the larger peers, because those larger peers were busy fighting some other battle. For example, Expedia was more focused on defending their market share in India. So their focus, market share in US. So their focus on India would be limited. So I think one is to create distance through time. Other is to have very sharp specialization or verticalization. Very good example would be Big Basket, which has a very specialized supply chain, which goes back deep into the farmer. So now when a Flipkart or an Amazon needs to take a crack at that, they have to build a whole new capability, which doesn't exist at this point in time in those companies. So I think specialization acts like a moat. And third thing is, I think what Raghu was saying, that having an empowered team, which is very, very fleet-footed in decision making. Because when you are competing with a big company is always very distant from the work on the ground. And if the startup entrepreneurial energy is directed at very high speed of execution, then sometimes you can begin to leave these behind. And then you can become a gorilla yourself. So I think speed of execution, specialization, early mover advantage, those are some of the ways by which you can compete against these mega companies Another way to compete is you ally with a competing mega company. And a very good example is Big Basket, which has strategic alliance from Alibaba. And there are many large companies that are willing to take minority positions. So it's not that you have to cede control. You could be still running the company as an entrepreneur, but benefit from the presence of a gorilla in your balance sheet.
Excellent. So now let's move on to the 9 determinants of scale that Hari, you talked about. You know, from markets and for the purpose of our audiences, these determinants of scale are, or rather, let me not say it. Hari, I would welcome you to say that. What are the 9 determinants of scale in the book that you talk about? And then we'll go into a deeper conversation on that.
Yeah. So I think we've identified, being part of a large mega trend was an important component. Total market size, which is the total addressable market, was important. Making the right strategic choices at the key junctures of the growth is an important determinant. Strategic execution is very critical. Founder ambition is very important. Foundation building is important. Customer centricity is core. Culture is very critical. And finally, the human capital, challenges, human capital issues that need to be dealt with and navigated. So these are the 9 determinants.
Excellent. Thank you very much for spelling those out for us, Hari. There's nothing more wonderful to hear from the author's mouth himself to tell us what the book entails. So Sanjeev, I'll come back to you, and let's now dig deeper into the actual determinants of scale. As per your book, Sanjeev, one of the key determinants of scale is market opportunity. How much can an entrepreneur bank on being the first mover for market success? How to maximize the first mover advantage?
I probably, Deepshika, if you permit, enlarge your question and add mega trend to market opportunity. And if you are building a company which is in the middle of a mega trend, then the probability of success goes up very significantly. And the best example I can give you is one of our portfolio company, Azure Power, which is a solar power producer. And at this point in time, globally, there is a big trend towards investing in environment-friendly businesses. And solar power is right up there as a theme for investors. And in the last 1 year, our company has tripled in terms of market valuation because they are sitting in the middle of a mega trend. I think the other mega trend that Raghu has been a part of, all of us are part of, is digitization of various industries. So it has happened to retail, it has happened to transportation. Now, as Raghu was saying, the next could be agriculture. So I think that would be another example of mega trend, which has helped create companies like Amazon and Flipkart and Ola and Uber. So digitization disrupting industries. And the third mega trend, which Hari outlined the other day, is the next India, which is the next 400 million people who are coming online, whose needs are very different from the urban India that has been so far impacted by digitization of industries. So I think one, you want to be mindful of when you're building a company, that are you in the middle of a mega trend? For example, when Daksh was being built, there were 2 big mega trends. One was proliferation of internet, which means a lot of people were interacting with websites and need to get their questions answered. And hence we brought that function to India. And 2, offshoring to India. Through IT services, we had already proven that India has very large intellectual capital. So when Daksh was born, it was a beneficiary of 2 big mega trends and also a beneficiary of a $100 billion industry. Similarly, the market size question that you were alluding to. Similarly, Big Basket, when it entered the grocery was a $300 billion category going to $600 billion category. And what we have found through our various experiences, that at the point that you can unearth a $10 billion market in the country, you can create a $1 billion valuation through 5% market share of that particular industry. So I think the learning from mega trends and market is that get yourself in the middle of something big which is going on, and then make sure that your sub-market is at least $10 billion in size, so that if you take 5% market share, you can create a $1 billion value company.
Fantastic. So mega trend, and keep an eye on the market opportunity. And as you ride the wave, as they say, it yields the results. So now let me just talk about, some of these strategic choices that an entrepreneur needs to make as on the move. I mean, for example, today, as we say that, this year has been the year of edtech and further digitization, of course. So what do you think are, the strategic choices that an entrepreneur could typically make? And how do you identify what strategies will work and which will not work, and consequently minimize the risk? Because this, if there's a high tide, it will go down. So today there are a lot of people, who are coming in and investing into edtech and becoming entrepreneurs. It'll go down as well, or it'll stabilize to a level, right? Then what?
I think strategic choices that are made by an entrepreneur at different points in its history probably is the single most important variable in determining whether you optimize your potential or not. And I'll first give you a few examples and then draw what is the common theme across these examples. I think Make My Trips diversification from selling air tickets to hotels was one game-changing move, because air was a very low margin business, because the number of carriers are very few and they have their own distribution system also. But a hotelier, to attract audience, needed your support a lot more, and hence is willing to part with margin. So I think one transformational move for Make My Trip was from airline to hotel. I think the second transformational move in the life of Make My Trip was aligning with C-Trip as a gorilla, because they were competing with Go IPO, which had a very strong backer in Naspers. So that kind of, your earlier question, that how do you compete with the gorilla, that kind of equalized the game. And then the third big strategic move was to combine Go IPO and Make My Trip to become one huge monolith. Then you get the power over the market and you can increase your margin structure. So I think these three things in the life of Make My Trip were very important strategic choices that were made by founder. Big Basket that Hari is so very closely associated with, and so are we, made a very important choice from adding daily grocery to their weekly grocery business, which means that people need to buy their top-up grocery every morning, apart from doing their planned shopping, which happens once a week, and the business has galloped. Daksh made a very interesting choice to go beyond email-based customer service to voice-based customer service, because the universe of that was very, very large. And my sense is that behind all these pivots, inflection points, strategic choices, one common thread is that you got to be very close to the customer. In most situations, customers will tell you what capabilities to add and what inflection points to hit, if you can only keep them in mind. So at Daksh, we used to have customer advisory council that used to meet every year and give us feedback on our business. And one of the fantastic feedback we got in one of the meetings was that why don't you set up centers in Philippines, because they have very good linguistic capability. And same customer took his business to Philippines with us. So he also became our customer in Philippines, apart from being a customer in India, and we were able to become a global company. So I think if you're hearing your customers closely and well and objectively, then you will get a lot of cues on unearthing these inflection points or strategic choices that you make.
I just
Fantastic.
like to add to this,
Yes.
Deepshika.
Yes.
Sometimes strategic choices are intellectually obvious, but I think character is in being able to make those choices and stick to them. I'll just give you an example of Big Basket, right? So Big Basket chose the inventory-led model right from day one, when a marketplace model was the rage. So when investors like Tiger Global and SoftBank pretty much told us that your model is not going to scale and the marketplace model is the one which is going to succeed going forward, it needs some guts when the Pope and the Church of the investing world are telling you that you're wrong. Being able to stick to your conviction, I think, is important. So I think strategic choices is not just about being smart and intelligent. It's also about demonstrating character in being able to actually make those choices and sticking to them.
Absolutely excellent, Hari. So now we've talked about the external factors, the market, the opportunity, the trends, the clients, and the ecosystem. Now let me talk to you, Hari, about culture. I had that question as well, and then we have another one very similar. I've found a partner amongst the audiences. Anjali Ahuja says there is a saying called "culture can eat strategy for breakfast." May I request some insights into this? So, Hari, first from you, and then we'll move to Sanjeev for his thoughts on as well.
So everything nice in management can probably be attributed to Peter Drucker. I guess Peter Drucker must have said this as well. So I think culture is really the invisible glue that holds an organization together and gives it an identity. So let me just give you examples of different companies. In our experience, there are three broad types of companies. The first category of companies are those who have no clue about organization culture, who have no clue about what their own culture is, and who have no clue about how to make culture work for them. They are like individuals who have zero self-awareness, who go about life without knowing who they are. The second category of companies are those who have a reasonably good understanding, often an intuitive understanding of what culture is, what their own culture is, and how they could make culture work for them. And this category of companies don't make a cult out of culture. They are understated about culture. I think this category is really the best of the lot. The third category of companies are those which make a song and dance about culture, which shout about their culture from the rooftops, sometimes create a cult around that culture, and that cult sometimes ends up excluding some categories of people, some categories of stakeholders. I would put Zappos, for example, in that category, which is very exclusionary. And many of these last category of companies, focus a lot more on the artifacts of culture. Artifacts could mean, for example, a dress sense is an artifact. The way an office is decorated. The office get-up is an artifact. A policy perhaps is an artifact. A celebratory style is an artifact. But none of this is really a reflection of culture at all. Culture is not even espoused values. Companies might say we are very customer-centric, we are very agile, but those statements could be for PR, or at best they could be a statement of intent, but they don't reflect culture at all. Culture is really the unspoken stuff. You need to peer beneath the surface. As Sanjeev says, it is like the operating system, which is invisible, but which really runs all the applications on top. So you never get to see culture as such. If you confuse artifacts with culture, you're being naive. So I think to really understand a company's culture, you need to peer below the surface. You need to evaluate how decisions are taken, how lateral hires are assimilated, how people are empowered. So all of these, what kind of people are recognized, what kind of people are rewarded. So all of these things really constitute culture, the unspoken stuff, the tacit stuff. And on this subject, we have not been very prescriptive. And the reason is because excepting for patently or blatantly, toxic cultures, there is no really right or wrong culture. So cultures are of different types. For example, Amazon has an extremely aggressive culture. Half the people hate Amazon, half the people love Amazon. The VP HR of Amazon had once said, our culture is aggressive. Of course, it's aggressive. You can receive an email in the middle of the night and expect a response in a couple of minutes. And if you don't respond, there would be a WhatsApp message following up. But that's the way it is, because we are trying to disrupt the world. We are trying to do things in an accelerated time frame. And this is the way we will operate. But some people hate it, some people love it. But it may not be a toxic culture. So cultures are very different. I think it's ultimately about a personality. Individuals are all different. You don't have to be like somebody else. Each of us is very different. Each of us can be successful. It's important for each of us to know who we are and make whatever we are good at work for us. And that's true for companies as well. They just need to acknowledge, understand deeply who they are and make it work for them.
Excellent, Hari. At this time, let me just invite, we have a repository of questions coming in from the audiences. Let's make it interactive. With your permission, the authors, Sanjeev and Hari, I would like to invite Uma now to ask her question. Uma, you're one of the panelists now. Can you hear me?
Uma is on mute.
Yeah. Hi. Thank you, Deepshika.
Hi, Uma. Yes, your question, ma'am.
Yeah, Sanjeev and Hari. So this is many congratulations. And this sounds like a Bible for a startup to build scale. And it's definitely a must read for all entrepreneurs. So my question is, you mentioned culture and you partly answered that, Hari, as one of the determinants of scale. So would you like to share that how good culture translates to scale? You partly answered, actually.
Yes.
Yeah.
So I think the way to look at it is that, scale is determined by all these 9 parameters. You need to get all of them right. And culture is an important one too. I've seen, companies which have got many things right, but did not get the culture right, stumbled along the way and sometimes even fell by the wayside or went through major blips. Some very obvious ones can be called out. So for example, Uber. Uber was known for its toxic culture, toxic bro culture. Nobody talked about it a lot because the founder, Travis Kalanick, was an extremely, charismatic individual, highly respected as a star entrepreneur in the ecosystem, until one fine morning when a woman by name Susan Fowler decided to blog about the culture, when things blew off. And very quickly things escalated, and Travis Kalanick had to reluctantly step down. And we saw what was happening at WeWork too. So, culture is also how honestly you behave. So example, WeWork was clearly a real estate company, but it was masquerading as a tech company and trying to get tech company valuations. That's also to a large extent culture, the honesty with which, you project yourself. Big Basket right from day one has said, we are not a tech company, we are a retail company, and we are therefore tech enabled. I think some degree of honesty is very critical. Even in India, you can see, you saw several companies falling off. All the rocket internet companies in India, whether they were Food Panda or Jabong, initially did well. And you can have poor culture, and for short periods of time, you can do extremely well. But sometimes you will stumble and fall in a big way. All of them had serious culture issues, serious governance challenges, and rocket internet eventually, wound up in India, lock, stock, and barrel. And all these startups, whether it was Jabong, which was valued at $1.2 billion at its peak, got sold off for $70 million. Food Panda was, sold off in a fireside sale. So many of them actually came apart because of not having the right, values-driven culture.
Thank you.
Excellent. I hope that answers your question, Uma. Now, may I welcome Shalini Umachandran. Shalini, you are a panelist now. Can you hear me?
Hi, yeah, I can hear you. Yeah.
Hi, Shalini. Yes, ma'am, your question.
Congratulations, Hari and Sanjeev. It's really, just finished the book earlier this morning, and it's really something. It sets out sort of the reality of being part of the startup world, and that's really rare. So, since we're on the topic of culture, it's not just within startups, but also this whole startup world is full of these words and phrases, very macho culture in a way, go big or go home, fake it till you make it, things like that. So I was wondering if part of the motivation to write this book was also to counter this sort of high pressure culture, which puts so much stress on founders.
Sanjeev, you want to take this?
No, go ahead, Hari. Please go
Okay,
ahead.
yeah. So, go big or go home, was a slogan in the Valley, during the dot-com days. And somehow we don't seem to agree with this approach of go big or go home. I think go big is great, but being in a niche also is great. And the idea of go big is extremely helpful because it sets out ambition. It gives something for the entrepreneurs to aim for, something very big, and can be applied in the non-profit space also. So, for example, you can have an entrepreneur who will pick up a school in a village of 100 students and work very hard to improve the quality of education for these 100 students every year, year on year. But you could have a different social entrepreneur who does not want to do this, who wants to adopt 1 million schools across the country and try and improve education for these million schools, maybe using technology. So both are perfectly all right, which is, go big or go niche. But the alternative that was, used was go big or go home. I think it was very brazen. It was, I think, very arrogant. And many of the startups which went down this path of propagating, had some challenges. For example, I'll take some names. Paytm, for example, adopted this philosophy at the peak of demonetization when it was growing gangbusters. But once UPI came, and then you had several other startups, whether it was PhonePe or Google Pay, which made transferring money so easy and so inexpensive, that slogan actually fell off. So I think it's a statement of arrogance. I think every entrepreneur should do what they are deeply passionate about. Some of them may be passionate about making an impact on scale. Somebody may be passionate about touching a small community and creating a sustained impact for that community. I think everything should be respected.
Fantastic, Hari. I now welcome our next question from Vandhana. Vandhana, can I invite you now? Let me just see if she can hear me. I can't see Vandhana. So let me just quickly drop that off and we'll come back if you see Vandhana again. Anup Bhasin. Anup, welcoming you to ask.
I can see Vandhana's message on the laptop though.
Yes, maybe she'll join back again. Yes, I can see her now. So Anup, in the meantime, can ask his question. Anup Bhasin, can you hear me now?
Hi, Sanjeev and Hari. Congratulations on your book. My question was that, Sanjeev, you referred earlier to the fact that the entrepreneurial age has gone down significantly, which is very true. But a lot of young entrepreneurs have never witnessed culture, so they don't know what culture building is all about. And many of them think that it's a luxury that can be taken care of once the venture gets going. So what's your view in terms of bringing these young entrepreneurs up to speed and make them understand that culture building is not a secondary exercise, but has to be undertaken right from the very beginning?
I think, Anup, that's a great question. And it is true. And I think somewhere we have covered in the book that the most comfortable place for an entrepreneur is product and technology. And culture, if we say culture is part of HR, is something that they have very little relationship with. So, does this get ignored in most startups? The answer is yes. And it gets amplified by another phenomena, which is that most of these startups are funded by venture capital investors who sit on the boards, and their focus is more on financial performance than on softer aspects of building a company. So is this an ignored element? The answer is absolutely yes. And can this be plugged? I feel that almost everything can be plugged by smart partnering. So for example, take this project of writing this book. I have no knowledge of writing a book, but Hari has written 6 of them, or maybe 9 of them. So if I partner with Hari, then I get all his learnings of writing a book, which will take me many years to figure out how to go about writing a book. So I think smart entrepreneurs are very good at figuring out what is it that they are good at and what is it that they are not good at. And they end up pairing with respective folks to make up for the lacuna. So there are examples galore, and in our book we call it this combination of Brahma and Vishnu. Brahma is the forward-looking strategist, visionary, and then Vishnu is the one who gets things done, including the building of culture in the trenches. So how self-aware entrepreneurs are about what it takes to build a company and where culture is in their scheme of things, how much feedback they get from board members, and how they can plug it by partnership, I think is very good way to think about covering up for this softer aspect of company building.
Fantastic. Now may I invite, I think we can see Vandhana and we can hear Vandhana at least. Vandhana, can you hear me?
Thank you. Thank you so much. Hi, Hari. It's great to meet you now. It's been a while since we have met, and I'm very happy that I got to be a part of your launch. I'm very excited to read your book as well. And I have a question for both the authors here, actually. So I know the book is about building a sustainable startup from a pony to a unicorn. But looking at the situation now, there is, and I also run an incubation center for women entrepreneurs. There is a lot of, there is a lot of topics, and there are a lot of entrepreneurs who are going through failures, right? There are a lot of entrepreneurs who are going through shutting down of businesses, and they are looking at less scalability. They're looking at reassessing the entire model itself right now, looking at the situation right now, So what is your take? Is there some learnings that they can find through the failures that they face? What is it that they can learn now that you feel is very important for them? Is there any learning that can be done through the failures that they face? Is the question that I have for you. And even in your journey, I think even when we have discussed even about Big Basket, there are small failures that we do find, and we do learn from there on how we can, go for a better model and use that to actually scale up the businesses. Is it something that is also covered in the book? And what is it that we can learn through failures as well?
Okay, let me take a quick shot at this, maybe a minute, and then Sanjeev could take a shot. So I think, adversity is a good time to reflect and derive a sense of meaning and purpose in one's life. Always we talk of meaning and purpose. That sounds so theoretical, but I think crisis and adversity is the best time to reflect and figure out what's the meaning and purpose in our life. And that's true for entrepreneurs as well. And you're talking about the current pandemic. I think it has adversely impacted several businesses, but it also been a tailwind to several businesses, and several industries actually are taking shape. And those that have been adversely affected, I think it is time for them to figure out what is it that they need to do differently. Is it about addressing a different market segment? Should they make some right kind of a pivot that will help them get out of where they are? So some of the startups have failed to get the next round of funding. Actually, many of them have, and they are struggling. So I think it's not just this pandemic. Every situation. 2008 we had a crisis. 2000 we had a crisis. I think some of these crises lifts a few boats and also kills many other boats. So I think it is it is about being able to rejuvenate yourself and being able to be resilient in these times, which will help you stay very positive.
Fantastic. At this point, may I now welcome Anjeet to please ask your question. Anjeet, you are a co-panelist. Your question, please.
Yeah, hi, good evening. Congratulations, Hari and Sanjeev. The title itself is so, it's so fascinating that I'm going to just make a purchase order for this book, right away after this webinar. So, yeah. So my question is that, do you think it's also a cultural, policy, or maybe the culture that flows through the startup, that organizations like Facebook, the kind of strategies for scaling up that they adopt, such as buying out competition rather than maybe facing competition, let's say buying out Instagram and WhatsApp, and the kind of current situation that they have in US, that Facebook is facing right now. Do you think this is part of the culture that flows through the organization, or the kind of scaling up that organization startups follow?
Sanjeev, you want to
what's
take
your
this?
What's your thought on this kind of a scaling up policy? Buying out rather than making finishing off competition, winding it off, and rather than taking it head on and start with blue ocean strategies, and what's your take on it?
I think it's a function of founder ambition, and from there stems the respective strategies. So you can grow organically and you can also grow inorganically. And generally, Indian ecosystem is very organic growth oriented, because we believe we can build anything ourselves. While in the West, I think they put a lot of emphasis on time to market and acquisitions. And if an acquisition is accretive to the shareholders and employees, then is it the right thing to do? Absolutely, yes, because you must recognize that many of these companies are funded by venture capitalists, and venture capitalists have to return the money. And the money can be returned through two methods. One is to take the company public, and other is to sell it to somebody. And there are entrepreneurs who don't want to run a public company, because public companies means every quarter you are answerable to the street, and it's a lot of execution. So I know of an entrepreneur who sold his company 6 times to IBM. And all he does is he tries to identify what are the gaps in IBM's strategy, and then builds a company, and after 3 years sells it to them, and then bakes another one. Most of the semiconductor industry works like this. There are 3-4 biggies, and investors / entrepreneurs know what are the gaps in those big people's portfolio, and they essentially make companies that are built to be acquired. I think closer home, all the companies that were in the daily grocery business were certainly built with that model, because they are not sustainable standalone. So they had to be part of Amazon or a big basket. So I think it's a combination of ambition, motivation, market drive, the need to return capital that comes into play when these choices are being made.
Right. Thank you, Sanjeev. Though I think you answered. I feel that you answered from the other side of the table, rather than from Facebook's perspective. So But as you say that, yes, it's, more founder driven. So I believe it's a culture that maybe, it is more, because he drives the culture, and he puts across this flow. Yeah. Okay. Thank you. Thank you.
Great. So let's now move to Mani. Mani has asked a question. Mani, can you hear me?
Yes, Deepshika, I'm able to hear you. Thank you.
Fantastic. Over to you, sir. Please ask your question.
Sure. Hi, Hari and Sanjeev. Thanks for bringing out this book that helps people learn lessons and plan scaling up from being a startup to a unicorn. I posed a question originally on the QA panel, but I think Hari handled it. But nevertheless, I'll just ask that again. You wrote the book, Hari and Sanjeev, just before the pandemic sort of began. But now that we've seen the effects over the last many months, are there newer lessons that you will offer beyond what's captured in the book that may be helpful for particularly startups to navigate challenging times such as these? I ask that also because while we might call some of these events, particularly the events of 2020 as black swan events, they seem to be happening more frequently now, the 2008 crisis or the 2020 pandemic. So some survived, some haven't. So are there some important lessons from the events of this year that startups could learn from?
Hari, please go ahead.
Mani, I've been privileged to author my last book with you, and you asking me a very difficult question. So I don't know if I can satisfy you, but let me make an attempt. So, these kinds of difficulties, are bound to happen once in a while. And some of these lift a few boats and some of these destroy a few boats, as I mentioned. And we've talked about some of this in my other book, which is Sailing Through a Storm, Making a Crisis Work for You. There we've talked about very clearly, what a crisis is also often an opportunity for innovation. So if you look at every single major crisis in history, go back to 500 years to 50 years to 10 years, you will notice that many people have used a crisis as an opportunity to innovate. So, if you go back to 1453, the Ottoman Turks blocking the land route for trade between India and Europe actually triggered a massive search for sea routes to India. In the process, the world discovered Americas. Magellan went around the world. Vasco da Gama came to India. World War II, I think, led to so many innovations. The rockets that were used by the Germans to attack London were actually improvised to send man to the moon. And you had sulfur drugs, you had radar, you can think of every single innovation. In fact, the progress from 1950 to almost 2000 can largely be attributed to some of the innovations that happened post-World War II. So broad answer, I think, is that every crisis is also an opportunity for innovation. And I think it's also up to individual leaders how they navigate a crisis. So I think individual leadership styles are very critical. And we've identified a bunch of styles, which we thought are very helpful in navigating a crisis of any kind. It could be a pandemic. It could be a personal adversity that you may face, loss of a loved one. So some of these characteristics are traits are, for example, character is more important than intellect. That's a very important lesson. We can go on and on about that. Having a blend of, feminine and masculine leadership style is very important in handling a crisis. And my view is that, most of the crisis in the world has actually been created by these alpha males with a super ambition, super greed for getting things done, right or wrong. So I think we need to also tweak our own personal leadership styles in a way that we can deal with crisis in a better way. I don't know if it has answered your question, but that's the best Mani I could do.
Very, very insightful, Larry. More importantly, the last point that you made about combination of styles, the masculine and the feminine. But thank you very much. I look forward to reading this book, and I also, heard about the next book that is coming out. Look forward to reading that as well. Wish you both the very best. Thank you.
Thank you.
Great. Thank you so much, Mani. Now may I invite Subramaniam CR to please ask your question. Subramaniam, can you hear me?
Yes, Deepshika, am I audible?
Yes, you are. Over to you, sir. Please ask your question.
Fantastic. Good evening to everybody. Many congratulations, Hari and Sanjeev, on this book launch. Privileged to be here. and looking forward to getting a copy of it. Question for you, Hari. Raghu started off, calling teams as one of the primary determinants, for startups to succeed. Today, if we see, especially after this 10 months of pandemic, even with large organization, talent is on the move. They're extremely distributed, and we clearly see that there is a change to that old wisdom that talent needs to be co-located and operate within those startup clusters, so-called as a valley or whatever, startup hub and things like that. What do you think would be some of the pros and cons of this trend on talent building and sustaining innovation for new startups?
So I'm still struggling to get my arms around a question like this, Subramaniam, but let me still make an attempt. I think, virtual teams is not new at all. So globally distributed teams have always existed. Companies that, like IBM, Accenture, which are in the global outsourcing space, have teams located in Costa Rica, in the US, in Krakow, in Poland, in Bangalore, in Tokyo, all working as part of the same team in different time zones, not having FaceTime. But they've somehow, developed the right kind of tools and the right kind of governance mechanisms to still be effective. If you ask me, is it perfect? I don't think it's perfect, but they've been reasonably effective. They couldn't have done any better because the teams had to be distributed. So I think the playbook for teams to be effective, in a virtual setting already exists, accepting that, companies which were operating in one country entirely were used to having FaceTime and being co-located and had got used to it. In some ways, I think it needed the pandemic to open up our thinking out of the box, to make us realize that you don't necessarily have to commute 2 hours in bad traffic to arrive under one roof to be able to make yourself effective. So I think going forward, what you're going to see is a blended workplace where you will find people largely avoiding some of the problems of commute, will be working at places that are convenient to them, but will make themselves available at office once in a while. Need not be 5 days a week. It could be 1 day a week based, it could be 2 days a week based on necessity. Having said that, I think startups which are at an early stage, it's important to co-locate them. I don't think they can operate, in such a fashion, virtual fashion, because the intensity of interaction at an early stage is far, far higher than in a more mature organizations where things are, pretty much operating on their own. It's on autopilot. You just need to intervene to deal with exceptions. But in a startup situation, everything is an exception. You're trying to do new experiments, new tests, trying out new things, dropping something and picking up something else. Everything needs very intense discussion. It'll be very difficult to substitute that on a Zoom call. So my own view is that once you get beyond a size, I think it's okay and you can manage this kind of remote working, but at a very early stage, it's going to be very difficult and co-location is critical.
Fantastic. Thanks, Hari. Thank you for answering that.
Fantastic. So as we close, I think we're at the fag end of the conversation, just bringing in 2 more questions. Is that okay, Sanjeev, Hari? We can take 2 more questions?
Yes, please.
Okay, fantastic. So Snigdha, may I please welcome you to ask your question? Can you hear me? I'll just quickly move on.
Yeah, I can hear you.
Okay, great.
Thanks,
Yes,
Deepshika.
question.
Hi, Hari. Hi, Sanjeev. Thank you, Hari, for this special opportunity to join this book launch. I just wanted to ask you, what do you think are the key characteristics of any new entrepreneur who wants to kickstart a startup?
Sanjeev, I think you should take this.
That's a tough one, actually.
Sorry?
Maybe Hari, you should answer it, given that it's a tough one. No, but I'll try.
Yeah.
I think, there are probably 2 ways you can skin the cat if you want to be an entrepreneur. One, to make a choice on whether you want to build a scale business or a boutique business. I think that choice is very important, because how you construct the organization, what kind of market opportunities you go after, you will come up with very, very different answers based on this question of what is your ambition, which is what we cover in this book. That what is your ambition? Do you want to change the world, or do you want to build something which is cozy? Take, for example, some industries are not amenable to scale. Coaching would be one such example. It's highly individualized. You're really driven by the founder, and therefore your ability to scale is limited to the founder time and things like that. So I think what kind of a person you need to succeed is a lot driven by what kind of business you are in. But there are 2-3 things which I think are running across everyone, which is that, are you building a business where you are an early mover? So you may not be the first mover, but if you are planning to build a scale company, you want to be an entrepreneur who is an early mover, pursuing a large market, as I said, excess of $10 billion. And thirdly, to keep the answer short, very good at letting go if you want to build a scale business. If there is one thing which is different between anti-scaling and scaling, this is the one, that founders are not good at letting go of power, letting go of wealth, letting go of control. So when we look at backing an entrepreneur, it's very important for us that apart from his other skills, his education, he's also very good at letting go. And the last one is a first principle thinker, because entrepreneurship is such a up and down journey that if you are a replicator, you are trying to mimic what you have done in the past or somewhere else, the probability of success is very low. So how good are you at first principle thinking? Because you are going to get different questions asked of you. Someday you have a mega competitor, someday you have funding run out, someday you have your critical people being poached by competitors. So I think your ability to think from first principles is probably the kind of entrepreneur that I would personally back with money.
What a wonderful insight. Letting go and the first principle thought process. Excellent stuff. Just last, I think I missed the mathematics there. There are 2 more questions coming. So Anjali Ahuja, over to you. You can ask your question now.
Thank you so much. Hearty congratulations, Sanjeev, to you and to Hari for bringing about this wonderful book. I just cannot wait to read it and read it many times. My question, Sanjeev, to a certain extent you have just answered, but I'm really curious to know that when you're deciding to invest in a particular, for a particular entrepreneur, and in the context of culture, we spoke about self-awareness. So is self-awareness one of the key check boxes that you look at while you're deciding to invest for a particular entrepreneur, Sanjeev?
Yes, very, very important, because it becomes even more important in a startup. Because what we have found is that people are either good at ideating or good at executing. And there comes someday a person like Bill Gates, who's good at both. But those kind of people are very, very rare. So I think self-aware entrepreneurs are very good at knowing what they are not good at. And then they surround themselves with people who complement them. So I think the entire construct of team configuration starts with the self-awareness of the founder. if he doesn't have it, then he just can't build the right kind of organization design.
Fantastic.
Sure. Thank you, Sanjeev. Thank you so much.
Thank you, Anjali, for asking that question. Now, may I welcome Guru Charan to please ask his question.
Am I audible, Deepshika?
Oh, yes. Hi, Guru
All right.
Charan.
Hi. Hi, Hari. Hi, Sanjeev.
Hi.
Congratulations for the book. Simple question. I assume there is a certain doggedness that an entrepreneur requires to be able to believe in an idea and then pursue it to its logical conclusion. That doggedness is also sometimes a cause for borderline inflexibility, because one would be too much in love with his or her own idea or way of doing things. In your experience of researching this book, are there any telltale signs of whose doggedness will eventually become a bottleneck and who is fundamentally also flexible enough to know perhaps it's time to change or pivot or modify the approach? Any telltale signs?
Hari, you want to take a shot?
Yeah, so I think broadly my own view on this is that an ability to deal with dissent and listen to multiple points of view without a not invented here kind of a syndrome is a good indication of the right kind of flexibility that is needed to navigate. I think if these don't happen, then pretty much I would sense that they are being dogged.
Fantastic. I would again, quickly ask your comfort authors. There are more questions coming in. Would you like to take them now, or should we request over email and then you can take it forward as well?
No, we are fine. We are enjoying the conversation. I don't know about Hari.
Fantastic. So let me now bring in Rajiv Gupta. Rajiv, do you have a question about late stage entrepreneurs, late age entrepreneurs? Late stage, late age is I'm kind of doubling between it deliberately because age is just a number. Rajiv, you are there?
Yes, I'm back.
Fantastic. Rajiv, your question, please. Hi, Rajiv.
Hi, Sanjeev.
Hi, Rajiv.
Hi, Hari. Long time.
Hi.
So, Sanjeev, this aspect of yours I did not know, but congratulations on writing the book, and I would look forward to reading it. I've already pre-ordered with Amazon. My query, Deepshika read out a little bit. Most of the time when we think of entrepreneur, read about entrepreneurs are generally young age or young entrepreneurs. Now, late age entrepreneur or people in 50s when they start, with all the rigidities of their experience, would this book address some of their idiosyncrasies?
Very good success story is Big Basket, where most of the team, I think, was in probably early 50s when they started the company. So experience brings a lot of strengths, especially in areas like human capital, finance. Those kind of functional areas are a little tough for people to relate with without going through experiential learning. While product and technology comes very intuitively to the younger generation, because that is the milieu that they are born in. So while our book is not specifically addressing the senior entrepreneurs, but our belief is that age really is more a state of mind. Jeff Bezos is 50 plus and he keeps innovating, launching business after business. So I think that notion now is kind of subdued. Probably 10 years back when companies were being built, there was this fad that you have to be below 30 if you want to be building a company. But now actually I think that has changed. So as long as you are connected to the ground and fleet-footed, agile, those characteristics are more important than what age group you belong to. And maybe Hari, you can add to.
No, I think I just same Big Basket example. I've been part of the company, and I don't think the founders at Big Basket are less energetic, less creative, less imaginative than 30-year-olds. And if you look at Mukesh Ambani, I think building Jio indicated that creating companies of scale, starting companies is not the sole prerogative of 30-year-olds. So I think age is just a number, truly just a number, and it's completely irrelevant.
Thanks, Hari. Thanks, Sanjeev. I think this addresses what I was looking at. I did start about 4 years back my third entrepreneurial journey.
Great.
There you go.
Yes. Sorry, you were saying something, Sanjeev?
No, I said, there you go. You are giving example.
Thank you, Sanjeev.
Fantastic.
You have been a mentor.
So great, ladies and gentlemen, thank you so much for a lovely, lovely evening. Just a small request, and on behalf of the authors, I can say that, all this is at the epicenter of the entire conversation lies the entrepreneurs. And we do believe that there are many of such entrepreneurs who joined us today. Any of you would like to talk about your journey, your experiences very quickly and come forward, please do raise your hand, and we will bring you up on the screen. Also, I see a familiar name, Hari Menon. If he's there, then I've received a special request if Hari can also share his views on the book. We have your testimonial, I think, but it'll be good to see you as well. Anyone else would like to speak? Please, most welcome. Otherwise, we will wrap up here. And yes, we have congratulations coming and pouring in for you, both of you, Sanjeev and Hari. Heartiest congratulations. It takes a lot of grit, determination, and patience to build a book much like a company. Congratulations once again. I have one last person who's raised a hand called Shelly. We'll just take that as a question and then we will close the evening formally. Shelly, can you hear me?
Hi, Deepshika, if you can hear me.
Hi, Shelly. Yes, ma'am. Over to you. Your question.
So you just asked the question about if there are other entrepreneurs on the call who wanted to share something. So I just wanted to take this opportunity to say that I was one of the early employees of Daksh, highly influenced by Sanjeev and Hari, and really looking forward to reading this book. I have it on pre-order. As I have formed my company almost 17 years after being a Daksh employee, I have to say a lot of the things that I learned from the two of them, we have brought into the company that I have formed. And so just wanted to say thank you and share that over here.
Fantastic. Benedict, you also had raised your hand. Your question, views, thoughts? I'll quickly move on to Sujoy now. Sujoy, you too had a question, comment. Would love to hear from you as we close the evening. Great. I think we're all kind of fiddling with the mute and the video buttons, but wonderful, gentlemen. Thank you once again. Lovely evening, lovely conversation. Any closing thoughts, and then we close the evening.
Can I have one last, please?
Sure.
Okay. Am I audible now?
Yes, you are.
Okay. Yes, there are so many books on startups these days. I think there's easily 40 books written in the last 5 years, and international books as well, like 0 to 1. So, Hari, in your research for the book, you must have browsed through most of them. So, how unique is your book?
Wow, that's a tough question, Benedict. I think our entire approach of writing this book has
Just
not been...
just an addendum to that. Sorry to cut you. So, from the reader's point of view, startup reader's point of view, how can they choose a good book for them? Because they also have a problem of choice.
Right. So, as I said, our entire approach of writing this book has not been based on intense research, frankly. I think we've gone through sufficient experiences where the dots were all there in the mind. And this book was really about connecting those dots. In the process, we did look up, other books and looked up stuff on the net to be able to, add to some of these insights and provide some relevant examples. But it was not a research intensive book. It was about connecting the dots that were already in the mind. Of course, some of the books that you mentioned, 0 to 1 are absolutely amazing books. And most of these books are also very readable. So I would suggest, you could go by, an entrepreneur could go by word of mouth to figure out that's the best way. In fact, I don't read books which are not, don't come recommended by somebody I completely trust. So I think entrepreneurs should also go by word of mouth and figure out what to read.
Benedict, can I make a small quick addition to that? I'm an avid reader. I have about 6,000 books with me.
Oh.
I've pretty much read every single book that's there on entrepreneurship, which was recommended by somebody. The most critical part of this conversation, especially in the past 1 hour, is the context. India is a very, very different animal. And most of what is available in terms of resources, in terms of mentorship, the speed to market and other factors that we talked about are very different internationally versus India. And I think that is the biggest beauty of this particular book. And of course, the beauty is the anecdotes that the two gentlemen here bring.
I was referring to books from India as well. There's plenty of books, startup books in India as well these days.
Great. I mean, I have not come across many, but yes, I would look up those as well. So let's together do a deep dive and add to what Hari and Sanjeev here.
So all the best, Hari and Sanjeev, for the book.
Thank you, Benedict.
Thank you so much, Benedict, for your time. I would again call upon Sujoy here to come in case Sujoy can still hear us. Otherwise, we are good to close a fantastic evening. I think Sujoy can't hear us. Hari, closing thoughts. Sanjeevji, closing thoughts, and then we close the evening.
Nothing particular. I think we loved writing this book. We hope you like reading it.
Nothing to add.
Fantastic. Thank you, everyone, for joining us today. What a wonderful conversation. Have a great weekend and pick up a copy of the book as soon as you log off from Amazon. All the best. Happy reading.
Thank you, Deepshika.
Thank you.